I wanted your view on Eternal, and the stock is in focus this week because global indices, they'll rebalance their indices, which will result in some passive outflows. But the question is, will the domestic funds lap up most of it? Let me explain this. Now, foreign portfolio investment limit, that was reduced from 75% to around 49.5%. Because of this change, it's triggered a potential sell-off by global indices or a rebalance by them. So global index providers like FTSE as well as MSCI, they have reduced Eternal's weightage in their indices. This is what is likely to lead to potential passive outflows. Now, because of this, there'll be a total of roughly around $820 million worth of outflows for this week itself, of which around $300 million of passive selling is expected today. This is as per Nuvama alternate and quantitative research estimates. The question, though, is will the domestic money support the stock, since the DI holding in the company itself is close to around 24%, of which you have the active mutual funds that hold roughly around 14% stake, while the passive mutual funds hold around 5% stake in the company. Remember, the active mutual fund industry itself is sitting on solid liquidity. So it'll be interesting to see whether or not there is some deployment into the stock, given the liquidity, given the kind of holding that they have. The company, remember, did a QIP in November 2024, and at that point of time, the stock price was around 250 rupees. So currently, it is close to around 10% lower than that QIP price. Interesting times ahead. Supply is due. The question is, will the domestic money lap it up? Prakash, I wanted your view